Hey, it's Sean Havens with the Benefit Haven. I'm going to be going over the topic that probably none of your clients want to talk about and is sold less and less these days as a traditional way of selling the product. It's more tied into life insurance, annuities, things like that. So the topic is long-term care and home health care. So we're going to be going through how it works, how the actual policy is broken down, and maybe why somebody would want to take advantage of getting these benefits as a policy to protect themselves and their family, their legacy. So before I go into it too much, make sure you're subscribing to our channel, guys, and click that link, the like below, and any comments that you have on the video or any other videos that we have, we'd be happy to answer those for you. Also, go to thebenefithaven.com and join our VIP membership group, which is the Mentor Haven, and get more of an in-depth dive on all these videos that we do, as well as the rest of the process, the actual application, quoting, and have a just wealth of knowledge and value in that package, along with other agents that are in there helping you out as well. Get a sense of fulfillment, answering questions, all that kind of stuff. So it's all in there. We really try to go through all areas of what makes an agent successful, marketing, making sure that you're up to date on all the products, the how to sell the products, prospecting, all that kind of stuff. And lastly, to join our team at the Benefit Haven, getting those high contracts, those street contracts, plus immediate vesting. So that's all going to be on thebenefithaven.com that you can find in the 3 top elements to being successful and making more money as an agent. So let's get into this. Long-term care, home health care. Now, I've been in the business for 17 years, and this is really where I started. I was with a company that had a great product for these, and I sold a ton of it. So these long-term care, home health care, long-term care is really kind of a comprehensive, so it really goes into 2 years or more by definition. So a multiplier amount of days of 730 or more, that's your traditional long-term care. And home health care is just all that care that can be done at home. You can do it with a comprehensive long-term care policy, or you can do it by itself, a standalone plan. All right. So how it works? Let me break this down. A lot of people just don't sell stuff, or provide products to their clients just because they've never heard how it works, or nobody's actually taken the time to explain how it works. So once you understand a little bit and dive into it more, then you make more money because you're adding stuff to your bag. Okay, you're adding different lines of business to your your appointment process, and you can go any direction, and you're not nervous about you're talking about these topics because you know how to walk through the whole process, and you understand there's a huge need for this. This is a number one reason why seniors go bankrupt today. Number one reason, yet it's the least talked about. And I get it that your clients don't want to talk about it, right? They just want to say, no, I'll go out to the desert, or they'll take care of it themselves, all that kind of stuff that we hear if we start to talk about this. But the reality is that it is the number one reason why seniors go bankrupt. Okay, and we have to do something about it. It's our job to talk about it, even though they don't want to talk about it. I know in my family, on my wife's side, there's been a lot of this that has been needed. Okay, so care, and the family steps in and have to put a schedule together to take care of somebody, or they run through their savings, and really they don't want to nobody wants to be remembered as being dependent on somebody else. So we got to talk about it. We have to knock down the walls, talk about it, and we do that by building emotion. And I'll get into that. Okay. But let's talk about the features, how it actually works, so that we can understand how to talk about it a little bit, right? So the daily or weekly benefit. So there's really 3 major components to a long-term care policy. And it's the daily benefit or weekly benefit, the multiplier, and the elimination period. So that's how the benefits are really put into place. So when you're looking at a policy or doing a quote, you're going to look at a daily benefit. Now, you can depending on where you're at, you can kind of look up what the average is, but let's just take an average of $150 a day. Okay, and it's usually on a 31-day cycle, but just for easy math, let's say $4,500 a month is what they would get, okay, for the daily benefit. Or you can do a weekly benefit of, let's say 800 or 1,000, and get to that $4,000 a month. So the daily benefit is, a lot of policies work like this. Okay, so we'll really focus on what most of the policies focus on, the daily benefit. So let's take The daily benefit, which let's say $150 per day. Okay, and then we go to a multiplier. Now, if you're doing a traditional long-term care policy, you're going to have to go at least 2 years, which is 730 days, right? So if you go 730, or you can do 3 years, 1095, 4 years, 1460, or 1825 is 5 years. So that's your multiplier. That's how much of their pool of money is in the policy. Okay, so let's say for example we do 730 days. Okay, so what you would do now is you would take $150 times 730, and that would be your pool of money, or that would be your client's pool of money to pay for care. So if they only used $100 a day, then it would go a little bit longer. Okay, they don't lose the additional $50. That's just the most that they would pay in a given day, or if they do it by month, they wouldn't pay more than $4,500 in the month on this policy. So they can't access like $8,000 a month, you know, if they needed it to go into a nursing home or something. So that's your pool of money. Okay, so 150 times 730. So that's the pool of money. Now the elimination period is how they do the deductible period, which is usually 0, 30, 60, 90, and I've seen them go all the way up to 180 or even 365. I wouldn't do that on a policy, but let's say, so Medicare covers, and I'll just do this briefly, but Medicare covers up to 100 days of skilled care. Now, granted, you have to be in a hospital for 3 full calendar days before they'll provide this, but they will provide that, and that counts towards the deductible period if they're getting those benefits from Medicare. So you're going to have, that's the amount of time that they have to pay, or somebody has to pay before these benefits will kick in. So let's say they have a 90-day elimination period. So what would happen is now they would pay, or somebody would pay 90 days, and then this policy would kick in and pay the $150 a day or $4,500 a month, however the policy is designed. Now, most all policies go into effect the same way, okay, which is needing 2 or more of their ADLs, help with 2 or more of their ADLs, which is activities of daily living, okay, so bathing, eating, transferring, things like that. So now a doctor or a licensed nurse, they have to be the ones to say that they need the care. So most of the policies don't require a prior hospital stay like Medicare does. So that's how the benefits of the policy will kick in. And now as long as they have this, if they have a comprehensive long-term care plan, which means they can go to a nursing home, assisted living facility, home care, adult daycare, any of those things, they can use the full benefit at any of those facilities or home if you have 100% home care benefit. Now there are options to have maybe a 50% home care benefit, but it all depends on whatever you put in there and how the premium works out. So if you watch the video about how to uncover premium and know what to provide them as far as different options for premium, you'll know that I do about 10% or less as far as the full their income minus any large expenses. Okay, so that's how that works. So the elimination period, once they pay that, then they start paying this benefit for any of those facilities that they have, which means they're now protecting their income for their spouse, and they're not running through all their savings to pay for the care. Okay, so that's mainly how this works. You can choose, it usually goes from $40 to $300. The multiplier is anywhere from 730, so 2 years, 1825, 5 years. That's a lot of where they stop. There's not a whole lot of unlimited policies out there anymore. There used to be, but they usually stop at 1825. I'm sure you can find ones that go a little bit longer, but you know sometimes you can overinsure, so you're insuring for the Alzheimer's and in the longer term illnesses. But if let's say they break a bone or a hip or something or stroke, or they just need help for a year or two, well they could still run through $50,000, $60,000, $70,000 of their savings. So this is where they're going to really be protected for that kind of catastrophic expense where they're not running through their savings. And not only that, is they don't have to call upon their family to do the personal care. They can be watching over somebody watching over your clients. Okay, so that's where this kicks in, this benefit. So that's mainly how it works. And I would go in, I'd go to the software, I'd download the software or one of the companies, maybe you're with a captive company that has it, or like Mutual of Omaha has a great plan. John Hang, there's different companies that have plans. If you don't have a quoting tool, again, if you sign up with the Benefit Haven and you just contract under us, you're directly with the carriers. We'll provide you software to be able to quote those, and you can do comparisons, all that kind of stuff. So that's how you do it, and you can kind of mess around with it to see what the premium is and things like that. We also have a back office that will help you with that, long-term care, case design, and all of that. All right, so restoration of benefits. So I'm going to go through the additional features that a lot of policies have included. Some of them some of the companies make you pay for them. What is restoration of benefits? So let's say you have a pool. They have a pool of money of, let's say, $100,000. Okay, for example. So if they have a $100,000 pool of money and they break a hip and they need to use the plan for a year, they've just run through roughly about $50,000, and now they recover and they don't need the benefits of the policy anymore. So 6 months after they recover, they're going to have their benefits restored back into their policy to use it for something else. So now they're going to have the 2 years to 730 days back into their policy. Okay, so that's how the restoration benefits works. So a lot of times when you go through it, it's either included or they pay extra for it, but that's a really good benefit because there can be things, there's a lot of things that they can recover from to be able to use the benefits again and not have to run through their savings. Okay, so that's one of the features that you can provide for them. Another one is waiver of premium. Now a lot of policies do this already, where let's say there's a husband and wife, and they're both on the policy, or they're using the benefits of the policy. So they've activated the policy. They need help with 2 or more of their ADLs, and now the company is gonna waive the premium. So they're not only not paying for their care, but they're also not paying for their premium as well. So that's one of the main features you want to go over with your clients. Okay, so there are several other features of the policy. Those are the main ones that I think you need to know to get started with long-term care, a long-term care product. The purpose. Okay, so this is what, and I've done a video on the fact finder, and I think the purpose is important that you go over first why they would need the benefits of a policy without actually saying long-term care, without talking about product, talking about any of that stuff. Talk about the emotion, talk about experiences, right? So why would they want this? Independence. So they want to remain independent. They don't want to go live with somebody else. They don't want to be forced to do anything they don't want to do because they've been independent their whole life, and why do they want to end their life not being independent? Okay, so we want to talk about that. Freedom of choice, where they go. So if somebody doesn't have a plan, a lot of times they'll run through everything they have and they're forced to go to a place, a nursing home of not their choice, right? They have to go where the state tells them to go. Or, they don't get to be at home if they want to be at home. So those are things that we want to talk about as well. Protecting assets and legacy. So protecting assets is a big one. They've worked their entire life to have their nest egg, to be able to leave it to who they want to leave it to, or to their spouse, so they don't run through everything, and they don't want to have it go to a nursing home. Legacy. How do they want to be remembered? Okay, so they want to be remembered as not being a burden on their family, and not having to call on everybody or having them personally take care of them and doing those types of things that nobody really wants to do for their parents. I mean, they'll do it, but they really don't want to wipe their parents' butt, right? They don't want to do that. So they want to take care of them, but not in that way. So if they can have a plan to have somebody else do that for them, then it's probably the best thing for them. And we want to get into that. We want to talk to them about that because, yeah, they don't want to talk about it, but it's worse to have to do it, right? So those are the things. And emotion is the biggest seller of long-term care. These all are tied to emotions. So we talk about experience. So when we're talking in the fact finder, we're asking if they've experienced anybody else doing this. Okay, that's what we go off of. And we go deep into the questions, the follow-up questions, the open-ended questions, get them emotional, because it's important to have them act on that emotion so that they don't have to go through, they don't have to experience losing these things. That's why the plan of protection is in place. That's why we sell long-term care. And it's happening more and more. It's getting bigger and bigger. People are living longer. Medications are getting better. I don't know if they're getting better, but they're keeping people alive longer, right? So that's more need for long-term care. People are going to need this care. So you want to add this to your, bag of products that you're talking about, that you're doing, and the emotion. Some of the open-ended questions, which I'll go over a couple with you. So, when we're talking about an experience, so if they've had a mom or dad go through long-term care and have to be in a nursing home, how did that affect you? How did that affect your family? If you could have done something different, or if you could have helped them plan differently, what would that have looked like? So you're starting to get them to design a plan, right, by just asking them questions, right? If you could put your ideal plan together in place, that happens. You need care tomorrow. What would be your ideal situation? What would give you peace of mind? What would help you sleep better at night? Talk to them about that stuff. Just have a conversation, right? Don't break out the brochure. Don't just get into product and features. Talk to them. Have a conversation, right, about what's going to happen, about their ideal plan. That way you're not selling. You're just getting to know them and how you can better serve them. And then the sales, the actual close, becomes simple, right? I guarantee if you talk to them, these are going to be the 3 areas that you're going to fall into, one of these 3 areas. And then it's a matter of coming up with a premium that works. And again, you can do this. You can tie these benefits to a life insurance policy. You can tie them to an annuity. You can tie them to different things, but make sure they have something. The other thing you can do, and we started doing it a lot when it was harder for them to qualify for the traditional comprehensive long-term care plan, is doing more just standalone home care plans, right? Because something's better than nothing. So if they can have a 2-year, 3-year plan that pays $200 a day at home and get all levels of care at home, the custodial care, the skilled care, then that's a lot of times what they prefer, right? So if you ask them, where do you prefer to recuperate? Well, probably at home. Okay, well, we have a home care plan to keep you at home as long as possible. That way your family has help, with the personal care, and you can watch over them, watching over, your client. So that's really what you want to look at, the different options, different policies, but you do have the comprehensive long-term care. You have the home care plan by itself, okay, and that's really what you want to make sure that you understand the differences. And the home care is a lot less because they don't have the facility-based care in there. But anyway, that's long-term care. That's how it works. Now that you know a little bit of the fundamentals of long-term care, the features of it, why somebody would buy it, make sure that you're talking about it. Make sure that you go out there, you figure it out, you talk about it. We'd be happy to help and answer more questions for you, provide more material, and really help on that back end if you do sign up and join the Benefit Haven. You don't have to. You can stay right where you're at, but I would suggest you help your clients out with long-term care. It's getting bigger and bigger. People are using it more and more, and it's the #1 reason why seniors go bankrupt. So make sure you're using that. Okay? We'll see you in the next video where we're going to talk about some additional products and best practices.